Good evening, everybody. It's 9 p.m. Eastern Time, New York City time. We have the NASDAQ 100 futures that had put a bottom in. Tomorrow morning, the NASDAQ 100, with all the big high beta stocks that had sold off when we had called this market top, this is what that gap open will look like for the U.S. NASDAQ 100 stock market in the morning. And these are the futures that I'm showing on a daily level. That is in the NASDAQ futures. The E-mini 500 futures will have a gap up, and they will all gap up into resistance. So we're cautioning you about buying in and rushing in there and buying right away. There's still a lot of headwinds. It's a good way to start the month of March. Okay. And that is definitely spring is coming, everybody. And welcome to March 2021. The policies and all of the things that are happening. We have vaccines by Johnson and Johnson that came out. That is part of this gap in the beaten down tech sector. So we only tell you this to exercise caution. And the way that we see stock patterns is that people are still selling in to the opening bell gaps. That's been the pattern and whatnot. So it's a news driven event. The Dow Jones futures, which I'll show here on a daily, are gapping up and they're up 248 points. And the NASDAQ 100 is up 148 points. And the mid cap E-mini futures for the mid cap there, those are up 35.3, which has always been the best performer. So with the gap open up tomorrow for U.S. equity markets and what's going on around the world, we would tell you that whatever risk management skills you may or may not have, you may want to come up with some. Or option trading room free trial will help you manage these U.S. equity markets live with market hours. Whatever you want us to customize for you, we'll do it. That's why we're here. So, U.S. equity markets in all four categories are going to gap up. Now, we had talked about the NASDAQ 100 composite and how it could gap up. We did that video over the weekend so that people would have a firm footing on the NASDAQ composite. You have all the videos, the S&P, the Dow, NASDAQ 100, NASDAQ composite. Yeah, you do. They're all right here. And not only are they there, we'll just let you know that these trends are severely down and that when they gap open up, as they will gap into resistance, and they will. So for the U.S. equity market to turn around, you would have to see 3 times the average daily volume, minimally. Not only that, you would have to see the advanced decline line breaking out. Yes, you would. There are many, many, many things. And let us not forget, when you're dealing in trading options, where you make the biggest money in the world, you're buying inflated calls and puts. And we had talked about that as well over the weekend. Now, we had talked about many things, and we were prepared for the gap open up. Now, if you are a real candidate of the market, and you really do not want the retail model because it won't work. You'll just bounce from one to another. Sound familiar? Let us take you down live market hours. Let us have the quality time to spend with you. You're the one that counts and always will count. Apply skills that are available. They're not available to the public because people don't use those skills, and those are mathematical skills. And mathematical skills have mathematical indicators and all kinds of things that go along with it. And that's what we're here to do is empower you with those skills. They'll take you a long way, year after year after year, and they will. And the biggest one that you can use always is that stop loss. And dealing in options and dealing with the opening bell gaps, they will sell short into the gap, believe me. So, heads up to all of our traders. You know what time it is. We spent time over the weekend. All of our people worldwide and our people in really super nice locations around the world who trade U.S. markets. All of you have received your emails and all of the technicals that go along with all of the diagrams set out herein. And now we're going to deal with what we call a gap open up in U.S. markets. Beware, be careful, find support, sell into resistance. Understand that everything is not in a bull trend, but rather all in sell signals. And so when you do hit price resistance, you will sell off. So if you're not executing correctly in these markets with that kind of upside volatility, don't buy their volatility that they're using to sell short against you. No, don't go down that road. These are things you're not aware of, but these are things that we're going to tell you about because you need to know them. Once again, enjoy the gap open up. We'll call it the March Madness gap. How's that? And just remember that this is in a downtrend. The S&P 500 chart, we already talked about it. It's sitting on the 50-day moving average. We talked about how important that 50-day moving average is. So it will gap up into resistance where it broke support. The Nasdaq Composite the same way. It was below the 50. They'll gap it above with using the futures market and will come up toward the top and will hit resistance. So when you have reversals, this is not a big reversal. There will be more volatility coming. And if the yields go higher, yes, over the next couple of months or any day, if they keep climbing higher, those rates, then equities are going to have a hard time. And we told everyone that 2 months ago, really. And we just told people even a month ago. And we told people, all of our people, that right now you're dealing with trends that went from bull to bear. And so you need to know how to trade the bottom up and sell. So there are bull trends and bear trends. These are called bear trends. And bear trends make a lot more money than bull trends. And they do. And take advantage. Be careful. Don't buy in the highs. Once again, U.S. equity markets gap open up in the morning to start our logo March Madness with the market gap.